What's up guys, my name is Darren Jackson. Welcome back to the channel. Hopefully you're having an amazing day so far. And today we're going to be talking about something a little different from previous videos. So if you've been following my channel for the past couple of weeks and you happen to be some of the new subscribers that I've gained over the course of a couple of weeks, I just want to say for starters, thank you for joining the channel and hopefully you stick around. For the past couple of weeks, I've been talking more about speculative it's hard to say that word, SPAC stocks that based off the news we see right now, we feel like are going to explode later, from the Forest Road Acquisition Corp merger from a couple of weeks ago to Torchlight and Metamaterials coming together. That's definitely brought a lot of people into the channel. So I wanted to just say once again, thank you so much and I appreciate it. And if you guys have any recommendation of any mergers or stocks or anything you find interesting that you may want a little on me to talk about, make sure you leave a comment below and I'll definitely get to that. But this video is going to be a little different. Now, if you happen to be a subscriber of mine that's subscribed to my channel for the past months, even the past year since I've had this channel up, then you would have came across a decent amount of my videos where I've stated that if anybody that was new to investing happened to ask me, Darren, what should I invest into first? One of my first answers will always be ETFs. ETFs being exchange traded funds. And the reason behind that is I personally believe that for the time being, it reduces the amount of research that you have to do when you would try to create your own portfolio of 10 to 20 plus different types of stocks. And it automatically diversifies every dollar you put into that ETF, which I feel like diversity is super beneficial to making sure that funds that are going down don't always completely outweigh the funds that are going up. I think that's really beneficial, especially for new investors. So I want to talk about an ETF today that's within a specific family of ETFs that's doing things a little bit differently than some other ETFs. And that family is called ARK or ARK. Now, before we get started with talking about the specific ETF that I'm investing in that I want to talk to you guys about, I do want to quickly shout out some friends of mine on YouTube named Johnny and Ryan over at Hell Yeah Money. I've been watching their channel for a while now. They make some really dope videos that pertain to new investors and how they've gotten debt free and how they hopefully will be able to get a boat and just live their crazy lives. And they've talked about ARK for the past couple of weeks now, and they finally got me to look into it and invest in one of the ETFs. So I just want to say thank you guys as well. Make sure you check their channel out. I'll leave a comment below before I upload this video. All right, so without further ado, ARK or ARK is a family of ETFs that has been established, created, and primarily managed by Cathie Wood, who seems like a modern day Warren Buffett, even though Warren Buffett is still alive and making some really good financial decisions. She seems to be the one that's starting to ascend a little bit more. And she created ARK ETFs for the primary purpose of letting people like you and I invest in companies that are disrupting the market. I believe is that over time, with new innovations that are coming out in the world, the line that separates sectors seems to be blurring out a little bit. So instead of having companies that are specifically in biology or specifically in technology, you have companies that use technology to alter DNA strands to help identify different cures and to help potentially cure different diseases, and they're known as biotech. And instead of having finance sectors or stocks within the finance sectors and stocks solely in the technology sectors, now you have different apps that allow you to pay small businesses money for whatever they're selling with your apps and with your phone. And those companies are financial technology or fintech. So the line's getting blurred a little bit, or a lot of it actually. And the goal is to be able to find those companies that are disrupting innovations such as those types of companies and get into those companies before they ideally take off. That seems to be the goal with ARK and the different types of ETFs they have established, which I think is really dope and really amazing. You can see the proof in that. If you look at all of the ETFs within the ARK family, you can see at least over the past year, they have grown tremendously. The growth is a huge factor, and I want you guys to keep that in mind because we're going to get back into that later on. So as I've said, there are many different types of ARK ETFs within the ARK family, but the one that caught my eye the most, honestly maybe kind of because it was the cheapest one, is the ARK Fintech Innovation ETF with the ticker symbol ARKF. Now, ARKF is primarily focused on technology that is essentially going to change finances forever. So one of the vague examples that I brought up pretty previously are finance apps that allow you to pay for certain things as small businesses with your phone. It's incorporating technology, it's incorporating finances as well. It makes things a lot more convenient, gives your phone even more use than it already has, and it can be something that's blurring the line of two different sectors, being disruptively innovative. That's the purpose of ARKF. So this ETF was established at the beginning of February of 2019, and its largest sector, making up over half of the entire portfolio being ARKF, is the sector called software and IT services, which makes sense for a lot of other things I'm gonna say. And speaking of which, some of the top stocks that make up that sector, that make up this entire portfolio of ARKF, are companies like Square, Zillow, and PayPal, which is significantly important on the reason why I feel like this ETF is very important. Not necessarily the most important out of all the others, but very important, and does exemplify more of how they've been able to grow so much over the past year. So before we get into the details of why I feel like it's really beneficial to invest in from the growth aspect, of course, I want to talk about the financial details of this ETF. Anytime I talk about a stock that I'm trying to persuade you to look into, or an ETF, I want to talk about the financial details I feel like will benefit you and something you want to keep a lookout of. And in this situation, in my opinion, there's only two things I want to bring up to your attention. So for starters, that's a dividend yield. That's one reason why I love ETFs. Aside from the automatic diversity that it gives you for every dollar that you put in, it's the dividends that they pay. This one I'm not really sure of. So upon checking some websites, I was able to eventually find out that its dividend yield is at 0.19%. And upon looking at some other sites, I was able to find that in December of last year, they paid a dividend of 3 cents. If that doesn't tell you that this isn't a primarily dividend ETF, I'm not sure what else does, because that's not super attractive. But that more exemplifies why I believe that the growth aspect of it is more important, even though we haven't touched the surface of that yet. It's the way they manage the ETF. Speaking of manage, the other thing, as far as the financial details goes, the thing that I feel like all of us as investors need to understand about this ETF and all ETFs before we invest into it is the expense ratio. Now, the expense ratio for this particular ETF is 0.75%. That's a lot. That's essentially $75 for every $10,000 that you invest into this ETF, which again, if I put $10,000 on the table and somebody comes by and takes $75 and I walk back, I might not be able to tell the difference, but it's still a lot of money in comparison to a lot of other ETFs. But I feel like the ARK family has an exception. So with that being said, ARK stands for Active Research Knowledge. ETFs are typically actively looked upon and adjusted to a certain degree, but this one is extremely active, which I think proves why it's grown so much, this ETF and a lot of others. Cathie Wood and her team are constantly looking for these innovative driven companies that are crossing sectors and are trying to improve the economy in the world in these multiple sectors all at one time with whatever innovative solution that they have, such again as fintech and biotech and other stuff like that. So constantly having to track that information and doing the extensive research and giving us the knowledge of it is why they charge so much for an expense ratio. So in hindsight, it's not a lot, but if you compare it to other ETFs, it is, but you have to weigh what you're getting from one or the other. So I do feel like even though it is a bit up there, it's gonna take me personally a while to put $10,000 into this particular ETF, let alone any stock asset, but I do feel like it's worth it. And here's why. So I've been talking a bit about the growth aspect of ARK Fintech, and there's a lot of different types of companies that they are trying to attack. And one of those is blockchain technology. Blockchain technology has been the conversation out of many investors' mouths, whether they know about it or they think they know about it, or they're like me and we know a little bit to be able to say the words, but we have really not much of an idea of how exactly it works from a technological mindset. But when you think about blockchain technology, the first thing you think about is Bitcoin. Bitcoin being a cryptocurrency, an online currency that has a value that we give it, and we feel like will have a major impact on the world and how we purchase things, whether it's domestically or even internationally, and it being a decentralized form of currency. Over the past couple of months, if you've at least been looking at websites like MarketWatch and Yahoo Finance, you've noticed that a lot of companies such as Square and PayPal and Tesla have been purchasing a lot of Bitcoin because they recognize that a lot of people are purchasing because they recognize that Bitcoin could have a major impact on the world, along with these other cryptocurrencies such as Ethereum and Litecoin and even a lot of the other alternative or altcoins. And now hopefully you recognize that 2 of the 3 companies I just said are within the sector of this particular ETF, being Square and PayPal. So Square is a company that's incorporated about small businesses to allow customers to make purchases, use their little credit card. You may have seen that at a couple of stores years ago. They may have this little square that you literally swipe your credit card or insert it. That's essentially what it is. But Square, being in the fintech sector, recognizing that Bitcoin is on the rise, decided to invest $220 million into Bitcoin, which is really beneficial and which drove the price of Bitcoin up. On top of that, Square is the owner of another app that I use every day called Cash App. And now Cash App also allows you to invest in cryptocurrency. It's up to you if you want to use it, but the fact that it's there is showing that they understand the importance of it. The other company is PayPal. PayPal essentially does the same thing as Square. There's a lot of people that also make online purchases that may want to have a PayPal account, such as myself. And PayPal also owns another company similar to Cash App, but it's called Venmo. And Venmo does a pretty similar thing. It also allows you to trade cryptocurrencies, which again is really beneficial for those people that use PayPal. And PayPal, just like Square, has also invested into cryptocurrency, primarily Bitcoin. There's a lot of benefit that comes with investing in ARK Fintech, especially if you focus solely on the blockchain technology aspect of it, on top of the risk management and everything else that they look forward to when it comes to the stocks within their sector. I feel like blockchain technology has a huge place in this world. It's going to continue to grow and evolutionize our form of currency. And ARKF is essentially an ETF that allows you to invest in a small portion towards that assumption of blockchain technology, along with the other fintech products that they are constantly searching for. So that's personally why I feel like ARKF is a really beneficial ETF to invest into. Yes, also because it's only a double-digit stock, being roughly $50 a share at the very moment. But let me know in the comments below what you guys think about ARK Fintech. Are you invested into it? If so, how much are you invested into it? Are you invested into any of the other ARK ETFs? There's like at least 6 to 8 of them at minimum. If you are, let me know in the comments below. And speaking of information, make sure you watch some of these other videos, which I hope help you guys on your investing journey as they have in mine. And please, like I said, if you have any other information that you for some reason want me to talk about, let me know in the comments below. I do appreciate the conversation with you guys. Thank you guys for watching, and until next time, take care.